my general thesis is the market's going to be squeezier than people expect. So I think we probably get to 50,000 faster than most people expect. When that is it this year? Is it within 12 months? Probably. Don't know. And over time, we just keep the adoption curve and it keeps going. So, where does it go at the peak of this cycle? I don't know. Again, I don't want to be hung by dicks online for all of this, but over time, does it take it 100,000? Does it take it 250,000? Of course it does. It's just a matter of when. And the timing part is the red herring. If you've got a long enough time horizon and the trend rate of adoption and the rise in the price of the asset over time beats all other assets, you're under no motivation to do anything else.
Entrepreneur Anthony Pompliano Pomp invited Real Vision CEO Raoul Pal to his podcast, where he quizzed the latter on a range of topics surrounding Bitcoin and its numerous run-ins with regulatory bodies. Raoul Pal poured cold water on the likelihood of Bitcoin hitting $1 million in the next 90 days. Speaking on Bitcoin and the 2023 financial crisis, Pal talked about crypto failures such as FTX, U.S. government's pushbacks against crypto, and former Coinbase CTO Balaji Srinivasan's bet on Bitcoin. Pal said $50,000 is coming faster than people expect and will probably happen this year or within the next 12 months. Despite this, Raoul suggests that if the United States fails to recognize the growing interest in cryptocurrency, many crypto companies could move to the United Kingdom. Bitcoin's 40% price increase to the growing realization of banking fragility, which is pushing investors towards alternative options such as cryptocurrency. Raoul himself got into Bitcoin in 2013 because he realized there was no trust in the banking system after the financial ruin of the investment banking company Lehman Brothers. Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our latest content.
I got into Bitcoin. So assets will go up according to the balance sheet. I think the balance sheet goes up significantly, 30% plus over time. Therefore, the equity market can go up 60% in the S&P, maybe more. So new all-time highs in the next 12 months or so, maybe a bit longer. NASDAQ gets there sooner because of its relationship. Crypto moves very fast. I got into Bitcoin in 2013 because I lived the European banking crisis and obviously the financial crisis. But the European banking crisis was very similar to what's happening now. The local bank in the village that I went in went under and took everybody's deposits. They bailed them in. We had a run on deposits, liquidity issues. They were invested in things that were illiquid, which was real estate. Real estate market had come under pressure. Very, very similar. Too many small banks in Europe. And then when you realize in a bank, you don't actually own your money. And people are now realizing that. And the treasurer and the Fed are like, well, we'll just pretend that it's okay. That drives people into this parallel financial system. I got into Bitcoin in 2013 for exactly this reason and have been an active participant of the market ever since. And so I think what Balaji is saying is, listen, guys, here's the life raft. You can take it. Now, Bitcoin's relationship with the Fed balance sheet is really interesting because it goes up exponentially. So if I look at it versus M2 year on year or the Fed balance sheet year on year, it massively outperforms in the bull markets and then pulls back when the liquidity comes out of the system again, but it keeps going up. So yes, I think there is a potential setup here for Bitcoin and the whole crypto market actually to be shockingly strong, more like 2013 than 2019. 2019, we had that big correction, and that was partly due to this G5 central bank balance sheets. Some of them were contracting over that period of time, and it pulled back the crypto market. This time around, I don't think we're going to see that. I think we're going to see all of the central banks falling into place because there's banking issues both in Europe and the US, and China has its own issues. So that they've all got the same issue, which is debt. They're all going to have to stimulate. So I think it's more likely to play out like 2013, which is very squeezy, then sideways consolidation, then very squeezy. Because, every time we go through these cycles, more and more people understand what the benefit is of Bitcoin. And now we've got 300 million people that have used Bitcoin and other crypto. The next time around, it'll be 1 billion people. or 600 million people, or whatever the number is. And those people will have been awoken to the fact that there is another way out of this. Now, the issue is, as we all know, is Bitcoin is extremely volatile. So it's very hard to think of it in terms of, well, it's a wealth preservation asset because people's time horizon is too short. But if you hold it long enough, it does extremely well. It does better than the Fed balance sheet, better than any other asset in existence. But people get freaked out by the up and down move. But if they just zoomed out, they see it does a phenomenal job at opting out of the financial system over time.
A financial crisis plus a probable increase in liquidity to come to Sol that equals the big bull case for crypto. Let's see if the liquidity arrives as I expect in due course, and you can use the bond market as your guide falling yields from here. Feels a lot like a combo of the 2013, 2018, and 2020 setups, but let's see still early days. As trust in traditional banking systems wanes and individuals seek out alternative options, the potential for explosive growth in the crypto industry and Bitcoin is becoming increasingly apparent. According to Pal, the chart patterns from 2013 suggest a similar trajectory may be on the horizon. Balaji believes that hyperinflation in traditional currencies could also pave the way for Bitcoin to emerge as the preferred digital gold and currency of choice in the global economy. While Srinivasan's concept of hyper-Bitcoinization may be seen as a marketing ploy, Pal acknowledges the possibility of it occurring within the next 12 months, though he cautions against setting a specific date.
You either kind of guarantee the system or you try and throttle it. My view is the US understands crypto, understands that it is the answer to the future, but they need to throttle it because if you create the bank run on the entire system, then the unintended consequences are simply gigantic. That's kind of everybody losing their jobs, the entire system breaking apart, the entire system of the United States as being the world leader, or Europe, and all of this falls apart. They don't want that, but I think they understand that there is a future here, but there's a battle to get people across because some people can't stand it, they don't like the idea of it, other people understand it but don't want it to happen too fast, and I get that. So I think that there will be an ongoing war, and if Balaji gets across what he wants to do, which is get more people to move out of the system into the Bitcoin market, we'll see the pushback coming. But it happens very quickly because the mob is pretty fast, as we know, and the mob with a hive mind who's deciding let's go to the parallel financial system, they can move really fast. So the government's going to try and stop it, but they do have, as Punk 6529 talks about, there is a freedom to transact here. You need the ability to do that, and if they go against that, then they're really trying to change the political spectrum entirely. And I think that the pushback would be so gigantic, but it is going to be a fight. But within this fight is a bigger world. The US has been down this route before. It tends to get self-protectory at various points. So after after Nixon left the gold standard, the US essentially had capital controls, and foreigners wanted dollars and they couldn't get them. And the flow of dollars and foreign exchange was restricted by the US because they were protective.
Raoul Pal has provided valuable insights into the potential ramifications of the US dollar's strength as a geopolitical tool and its potential to impede the global economy. According to Pal, several countries with weaker currencies rely on the US dollar to facilitate their banking systems seamlessly. The US dollar is crucial for banks as it is extensively used in international transactions. Although other major currencies like the euro, Japanese yen, and British pound are also prevalent in international finance, Pal highlights the significance of the US dollar and its impact on the banking sector. Furthermore, the emergence of digital currencies like Bitcoin could provide alternative avenues for international transactions in the future.
Dollars. You need dollars for your entire banking system. So I don't see a route by which that changes, and the US is also a geopolitical force, the largest geopolitical force, and they will force people to use dollars by coercion. So can that fall apart? It can if you debase your currency enough, which is kind of, it's not hyperinflation, but it's a different route to it, and it can lead to the same thing. Bloody difficult to do with this much debt around, unless they suddenly printed $50 trillion. So I think it happens over time. And it happens because the dollar is too strong, not because it's too weak. And the stronger the dollar gets, the more it chokes and forces people to find alternatives, whether that's cryptocurrency for a lot of people. I think Bitcoin will work for a lot of people over time once the volatility of it comes down, as the adoption keeps rising. And others will form regional trade groups and will have maybe global currencies. There's no reason we can't start creating global currency baskets as on chain as a stable coin. It doesn't have to be a US dollar stable coin. And, if we think about the Eurodollar market, the stablecoin market is basically the Eurodollar market, except it's democratized. So everybody can get hold of the dollar. If you're in the Philippines or in Nigeria, you can get your $2 and send it to your aunt instantaneously. The Eurodollar market doesn't allow that. You have to go through the bank and say, please, sir. And they say, no, you're not big enough. You don't deserve the dollars. There's the politics, but this democratizes access to dollars. No real reason that the UK, let's say the UK actually goes ahead doing this, doesn't create the Eurodollar market on chain, the Euro stablecoin market. And we could have baskets of currencies, which we've not really done before. So therefore, you could trade a commodity basket currency or a technology basket currency. So it matches your customers with your needs. Because let's say South Africa, their currency goes up and down because it's a poorly managed economy, but they're also beholden to the commodity cycle. And that's driven by the dollar. But if they dealt directly with China and the EU, maybe they don't need to have the dollar in the middle of it. So I think it happens over time, and it happens because the dollar's too strong and it forces people to do it.
It is important to reflect on the implications of the global financial crisis and its impact on the economy and other assets. With the evolving global power dynamics, it raises the question of whether the U.S. will continue to rely on the dollar as a means of coercion or shift towards alternative currencies and assets. Will these ongoing global financial crises uplift the value of Bitcoin and U.S. dollar? That's all about today analysis. Do you agree with Raoul Pal's perspective on the given issue? Share your thoughts in the comments section below. If you found this information helpful, please give this video a thumbs up and subscribe to our channel. We will continue to bring you more updates in the future.